Hello students, today we are going to discuss about question number 9. Again in this problem, they are asking us to prepare a reconciliation statement. Now, they have given net loss as per cost accounts and they have not given net loss as per financial accounts. So we have to find out a net loss as per financial accounts by preparing a reconciliation statement. Now, how do we basically do this? So the starting point for preparing reconciliation statement is net loss as per cost accounts 3,44,800. So we have to start the reconciliation statement by recording net loss as per cost account, which is 3,44,800. Now again let us look at all the items one by one. Work overheads under recovered in cost accounts. Under recovered means under absorption. So whenever they give under recovery or under absorption, we have to deduct. Now if they had given net profit, in case of profit we would have normally deducted those under absorption, but here the problem, they have given net loss, so we have to reverse the thing. That means whatever we items we used to add whenever we had profit as per cost accounts, same item we will deduct, and whatever items we used to deduct when we had profit, same items we will be adding. Now please remember, when they give profit, what are all items you will add that you have to deduct in case of loss, and whatever items you deduct in case of profit, in case of loss you have to add. ಸೊ ಪ್ರಾಫಿಟ್ ಅಲ್ಲಿ ಏನೇ ಆಡ್ ಮಾಡ್ತಿದ್ರೋ ಅದನ್ನೆಲ್ಲ ಲಾಸ್ ಕೊಟ್ಟಾಗ ಡಿಡಕ್ಟ್ ಮಾಡಬೇಕು. ಪ್ರಾಫಿಟ್ ಬಂದಾಗ, ಪ್ರಾಫಿಟ್ ಕೊಟ್ಟಿದಾಗ ಏನೇನ ಆಡ್ ಮಾಡ್ತಿದ್ರೋ ಲಾಸ್ ಕೊಟ್ಟಾಗ ಅದನ್ನ ಡಿಡಕ್ಟ್ ಮಾಡಬೇಕು. ಸೊ ಜಸ್ಟ್ ಉಲ್ಟಾ ಮಾಡ್ಕೊಂಡು ಹೋಗ್ಬೇಕು. ಸೊ ಲೆಟ್ ಅಸ್ ಡೂ ಆಸ್ ನಾರ್ಮಲ್. ಸೊ ಲೆಟ್ ಅಸ್ ಫರ್ಗೆಟ್ ಫಾರ್ ಅ ಟೈಮ್ ಬೇಯಿಂಗ್ ದಟ್ ದೇ ಹ್ಯಾವ್ ಗಿವನ್ loss. Let us only consider it is profit only, and as usual how we were doing, same way we will analyze all the items one by one. So depreciation overcharged in cost accounts. Overcharged means over recovered, so it will be added. Then again, since it is a loss, we have to deduct now. Then again, administration overheads recorded excess in accounts. That means it is over absorption of administration overhead. So over absorption means we have to add. Since it is a loss, the question is about loss, so we have to deduct. Then again, interest on investments. Interest on investments is an income, so generally we were adding. But in this question, since it is loss, we have to deduct. Then again, goodwill written off is financial rules. Goodwill written off is an expense. So whenever there is an expense, we used to deduct. But since it is a question of loss, now we have to add. Then again, income tax paid is an expense. So income tax paid is an expense. So this income tax, whatever they have given, normally it is an expense and we used to deduct. But since it is a question of loss, now we have to add. Then again, stores adjustment credited in financial books is an income. We have to add normal cases, but since it is a question of loss, we have to deduct. Then again, depreciation of stock charged in financial books. So depreciation of stock charged in financial books means it is an expense. So normally we used to deduct, but since question is about loss, now we have to add. Then again, selling overheads over recovered. Over recovered means over absorbed. Whenever there is over absorption, we have to add. Since it is a question of loss, we have to deduct. Then no star rent charge in cost accounting. That is only purely cost accounting items we have to add. Since it is a question of loss, now we have to deduct. Then again, value of closing stock and value of closing stock in cost accounts and financial accounts they have given. So as per costing cost accounts, it is 20,750, and value of closing stock as per financial accounting, it is 18,750. Now in cost accounting, the value is more. That means it is overvaluation of closing stock in cost accounting. So the difference between these 2750 and 18750 is 2000. So whenever we have overvaluation of closing stock, we used to generally deduct. Since the question is about loss, we have to add. Then again, interest on loan charge in financial account, it is an expense. Normally we used to subtract. Now we have to add. So now let us forget about profit. Now profit let us forget about profit. Now we know in case of loss, whatever items we used to earlier add, now we have to deduct. Now what are all items we are supposed to add? Well, let us add one by one. The first item we have to add in case of loss is under absorption or under recovery of work overhead. Then again, what are we supposed to add? Goodwill and income tax. These two items also we have to add. Then again, depreciation also we have to add. Then overvaluation of closing stock also we have to add. Then again, interest on loan charged in financial account also. And so we will add all these items and find out total. Then again, we have to deduct certain items. So what are all the items we are supposed to deduct? We will deduct source adjustment. Here also we have to take the total of all the items which we are supposed to deduct. Now we have started the problem with net loss as per cost accounts, which is 3,45,800, and all the items which generally we used to subtract we have added here, and what are all items generally we are supposed to add we have deducted in this problem. So in case of loss we have to just reverse the items, that's all. So loss ಕೊಟ್ರೆ ಏನು ಮಾಡಬೇಕು, ಏನು ಜನರಲ್ ಆಗಿ ಆಡ್ ಮಾಡ್ತಿದ್ವಿ ಅದನ್ನೆಲ್ಲ ಡಿಡಕ್ಟ್ ಮಾಡಬೇಕು, ಏನು ಡಿಡಕ್ಟ್ ಮಾಡ್ತಿದ್ವಿ ಆ ಐಟಮ್ಸ್ ನೆಲ್ಲ ಆಡ್ ಮಾಡಬೇಕು. So this problems becomes reverse, that's all. Now we started the problem with net loss as per cost account. Then again to this we have to add a total of all the items which we have added. Then again we have to deduct the items which we have subtracted. So total will be 3,97,640. So this is your net loss as per financial account. So this is how you have to prepare reconciliation statement. Now again let us go to question number 10. See, this question number 10 is entirely different from all the problems which we have discussed earlier. Now in these problems again they have given find out the profit as per costing records and financial accounts from the following. So normally what they used to give, they only directly used to give the profit as per cost accounting and profit as per financial accounting. But in this problem they are telling us to prepare cost sheet and P&L account and find out the net profit between cost accounting and financial accounting. And when we have to see whether there is a difference between net profit as per cost accounting and net profit as per financial accounting, and if there are any differences we have to prepare reconciliation statement. Now again using this information we have to prepare cost sheet and P&L account. So first we will prepare and find out the net profit as per cost sheet. Now what they have given, the number of units which they have given particular Sony and LG. Now there are two companies which is one company is Sony and second company is LG, and number of units produced by Sony is 600 units and number of units produced by LG is 400 units. Now for manufacturing the 600 and 400 units, the direct materials for the same is 3,600 and 2,800. So direct materials means it is an item of prime cost. So LA record ಮಾಡಬೇಕು, it is an item of prime cost, and direct wages also it is an item of prime cost. Now then again they have given selling price. So this selling price is nothing but sales value. So selling price per unit they have given 25 per unit, and how many units they have produced and sold 600 units. So for Sony the sales will be sales. How do we find out sales amount? It will be 600 into 25 rupees per unit. For LG sales will be 400 into 30 per unit. If you multiply the number of units into selling price per unit, you will get a total sales value of both the companies. So this is the sales value. Then what else they have given? Work overheads is 80% of wages and office overhead is 25% of works cost. So then again actual work expenses is 4,500 and office expenses is 3,900. Now work overheads again they have given as 4,500. So 4,500 is for both the companies, and office expenses is also 3,900 for both the companies, that is Sony as well as LG. Now again they have given reconcile the costing profit with financial profit. So What we have to do basically is that first we have to prepare cost sheet and find out the profit as per cost accounting. Then again we have to prepare P&L account and find out the net profit as per P&L accounts. Then again finally ultimately we have to see where is there is difference between these two accounting, and finally prepare reconciliation statement between the profit as per cost accounting and profit as per financial books. So this is the different. This is little bit different from all the problems which we have solved. So first we will do, we will prepare cost accounting, make 3 columns, sorry, make 4 columns for cost sheet. One is particular, first company is Sony, third column is for LG company, and fourth column is for total. So we have to start with items of prime cost. So now we know direct materials and direct wages will be belonging to prime cost items. So we will copy the same values for direct materials and direct wages of both these companies. So direct materials of Sony is 3600 and LG is 2800. So we will copy the same amount here. Then again direct wages is 3000 for Sony and 2400 for LG. So in direct wages we'll write as direct wages and we will record both. Now in total column what we have to do, we have to add both Sony and LG total. Then again same way we have to do for direct wages also, we have to add both Sony and LG's total. Then again, how much is the prime cost? 3600 plus 3000, it will be 6600. Then again, in case of LG, it will be 2800 plus 2400, 5200. So total column will be 6400 plus 6000, 6400 plus 5400. It will be 11800. So we got the prime cost. So how did you start? You started with a cost sheet, direct materials. For both the companies, you recorded direct materials as well as direct wages. There are no direct expenses, so you arrive at prime cost. And once you get prime cost, you have to add work or factory overheads. So is there any work or factory overheads? They have given here for preparing cost accounting, work overheads is 80% of wages. So work overheads will be 80% of wages. So for Sony, it will be how much? What is the work overhead? What is the wages? Yes, for Sony it is 3000 rupees. So they are saying work overheads will be 3000 into, that means 80% of your wages. So they have given here below, look here carefully. Work overhead is 80% of wages and office overhead is 25% of work cost. So we have to find out work overheads, which is 80% of wages. So for Sony, how much is wages? 3000. So 3000 into 80%. So how much will be 3000 into 80%? It will be 2400. Similarly, we have to do for LG. So for LG, how much was the wages? Wages was for LG was 2400. So for LG, it will be 2400 into 80%. So 2400 into 80%. How much do we get? 2400 into 80%. It will be 1920. Then again, we have to add the total of 2 for total column. Now we arrive at works cost. So once we get this work overheads for both LG and Sony, then again we have to add prime cost plus this work overheads and find out what is the works cost. Now we have arrived at works cost. Now again we have to, what else they have given? After work overheads they have given office overhead is 25% of work cost. So once we get this work cost, on this work cost again we have to multiply into 25% and find out the office overheads for both the companies. Now for Sony it will be how much? For Sony it will be, for Sony company the works cost is 9000. So 9000 into 25%. Then for LG company it will be, the works cost is 7120 into 25%. Now we have to find out for Sony it will be how much? It will be 9000 into 25%. Then again for LG it will be 7,120 into 25%. 1720. Then again in total column again we have to add total of both Sony and LG. Then we have to arrive at cost of production. Now for prime cost, if you add work and factory overheads, you arrive at work cost. So once you get work cost, again if you add office overheads to work cost, you will arrive at cost of production. Now in this question again they have nowhere given there is selling and distribution overhead. That means selling and distribution overheads is not there in this problem. So whatever cost of production you get, that itself will be the total cost in this problem. So how do we get this total cost? Work cost of 9,000 plus office overheads of 2,250 in case of Sony, and again here in case of LG, your works cost plus your office overheads of 1,780. That will be your cost of production or total cost. Now you got or you arrived at total cost. So once you get total cost, again what you have to find out? You have to find out profit. Have they given profit? They have not given profit, but they have given certain information using which we have to find out sales. Now selling price here they have given 25 per unit. I told you how we have to find out sales value. They give number of units produced and sold. Now 600 units they have manufactured by Sony. So 600 units into 25 rupees per unit is the selling price. So 600 we have to multiply into 25 and find out the total sales value of Sony. And for LG it will be 400 into 30 rupees per unit. That will give you the sales value of both the companies. So for Sony it will be how much? 6,000 into 25 rupees per unit. Sorry, 600 into 25 per unit. So for Sony company it will be 600 into 25. Then for LG sales will be how much? For LG sales amount will be how many units have been produced by LG? They have manufactured 400 units and sold at 30 rupees per unit. So 400 into 30 rupees is for LG. So once you do this, you will get total sales value. So for Sony, it will be 600 into 25. 15,000 is the sales value. For LG, it will be 400 units into 30 per unit. Now, again, we have to take total of both sales of Sony and LG. Now, here in this case, the profit will be your balancing figure. So, whatever balancing figure you get, that is difference between your total cost and sales, that will be your profit in this question. Sorry, profit in this question. Now, it will be for Sony, the profit will be sales value of 15,000 minus total cost of 11,250. So, 3,750 is the profit of Sony. In case of LG, it will be 12,000 sales value minus 8,900 total cost, which is 3,100. So the total profit of both the companies, Sony and LG put together, will be 6,850. So 6,850 is the profit as per your costing book. So profit as per costing book is how much? 6,850. Now first step is completed, that we have found out the profit as per costing book. Second step, we have to find out the profit as per net profit as per financial accounting. So how do we find out net profit as per financial accounting? Again, we have to debit all the expenses which they have given. So here direct materials and direct wages is expenses, right? So direct materials and direct wages, whatever they have given, we have to record on debit side of the P&L account. So we have to prepare P&L account. So direct materials is expense. So Sony, how much is direct materials you have? 3,600. Similarly for LG, what is the direct material cost? 2,800. Then again, next expenses is direct wages. So direct wages, again we have to debit to P&L account. So how much is the direct wages of Sony company? The direct wages of Sony company is 3,000. Then again for LG company it is 2,400. Then again for preparing work expenses, they have given in additional information here below. Here in look at this paragraph, actual work expenses was 4,500 and office expenses was 3,900. So work expenses, and office expenses also you have to record on debit side of P&L account. So work expenses 4,500 and office expenses is 3,900. Now again on credit side there is only one thing, that is sales. So Sony, it will be how much? Again, it will be 600 units into multiplied into 600 units multiplied into 25 per unit, right? So this will give the sales value of Sony. Similarly for LG, it will be 400 units multiplied into 30 rupees. 400 units multiplied into 30 rupees, whatever amount you get, you will, that will be your sales value. So 600 into 25, how much do you get? Sales value of Sony is 15,000 and LG, it will be 400 units into 30 rupees. So it will be 12,000. So total sales value of both the company put together is 27,000. So your net profit will be this 27,000 sales value minus all these items which you have recorded on debit side. So sales value is 27,000 minus all the items which you have recorded on debit side. So net profit as per your financial accounting, which is your P&L account, is 6,800. So as per your financial record, how much is the net profit? It is 6,800. Now, is there any difference between costing and financial accounting profit? Yes, there is difference. How much is the difference? 6,850 is the profit as per cost book. As per financial account, that is 6,800. So the difference between both the books is rupees 50. Now we have to find out where exactly there is difference. Why there is a difference of this 50 rupees. Now, if you look at all the items here, one by one, we have to look at all the items here. Here, see, for preparing cost accounting and financial accounting, direct materials and direct wages will be, it's the only place where we have direct wages and direct materials and direct wages is same for both the cost and financial account. That means for preparing cost sheet also we use the same amount, and again for preparing financial account or P&L account also we use the same amount. So there is no difference. That means the cost sheet prepare ಮಾಡಬೇಕಾದ್ರೆ direct materials Sony company ಇಷ್ಟೇ ಇತ್ತು, LG company 2800 ಇತ್ತು. P&L account ಮಾಡಬೇಕಾದ್ರೂ the amount was same. That means here there is no difference between these two items. And again sales also will remain same. Sales also, finding out sales is same in both the cost accounting and financial accounting, because in both cost sheet and P&L account what we did, we multiplied the number of units into selling price. So where there will be exactly difference, the difference will be only in your work expenses and office expenses, because under cost sheet we observe the overheads based on predetermined rates, or based on overhead rates. That means we're preparing cost sheet. How we found out this work overheads and office overheads? It was based on percentages. So we calculated it based on predetermined rates or overhead rates. But for financial accounting, that is we're preparing P&L account, we directly took the amount which they had given in the additional information. So now, if you look at the work expenses in P&L account, it is as per financial account, it is 4,500. Now, if you look at the work overheads of your cost accounting, it is how much? Work overheads of both the companies put together, it is coming to 4,320. So this is the first point of difference. So cost accounting ಅಲ್ಲಿ ನಿಮಗೆ work overheads ಎಷ್ಟಿದೆ, work expenses 2,400 plus 1,920 will be 4,320. But in case of financial accounting, it is 4,500. So there is a difference in your work expenses. So the first reason why there is a difference is difference between cost accounting, work overheads as per cost accounting and work overheads as per financial accounting. So work overheads or expenses both are one and the same. So how much is work expenses as per financial accounting? It is 4,500. 4,500. But as per cost accounting, it is 4,320. Now, similarly, there is again difference between office overhead. So office overheads as per cost accounting, the total is coming to 4,030. But for office expenses as per financial accounting is how much? 3,900. So 3,900. Now, because of difference between these two items, there is a difference in the net profit of rupees 50 between cost and financial accounting. Now, we have to see this. As per cost accounting, work overheads is 4,320. As per financial accounting, it is 4,500. So, which is more? Financial accounting is more and cost accounting is less. So, when cost accounting is less than financial accounting, it is under absorption. So, it is under absorption. So whenever it is under absorption, what you have to do? You have to add or deduct. You have to deduct. Under absorption, we have to always deduct. Then again, office overheads as per cost accounting is 4030 and as per financial accounting is 3900. So cost accounting is more than financial accounting. So that means it is over absorption. So when it is over absorption, what you have to do? In case of over absorption, you have to add. So using this information, we have to prepare the reconciliation statement. How we have to prepare reconciliation statement? You have to start with net profit as per cost account. So how much is the net profit as per cost accounts? It is 6,850. So 6,850, which is net profit as per cost account, is the starting point. 6,850. Then again, we have to add under absorption of office overheads in cost accounting. So we have to add under absorption of office expenses. How much is the under absorption? The difference between these two, 4,030 and 3,900. So 4,030 minus 3,900. How much is the difference? 130. So the difference is 130. So here, since there is only one item, it will be same. So 6,000 cost account net profit as per cost accounting 6,850 plus 130, we got 6,980. Then again, there is again one item which is of work overheads. It is under absorption. So under absorption we have to deduct. So how much we have to deduct? 4,320 minus 4,500. So 180 is the over. Sorry, here it is over absorption. Under absorption of work expenses. So how much is the difference? 180. Outer column also, since there is one item, it will be 180. So how much will be net profit as per financial accounts? 6,980 minus 180, which is 6,800. So that is what we have here. Financial profit as per financial books is almost 6,800. So as per reconciliation statement also, net profit as per financial account, we got same 6,800. So hope you have understood this problem. It is very difficult for me also to explain without board, but I have tried my maximum to help you out. So this is the 4 steps which you have to prepare when they do not give you directly the net profit as per cost accounting and net profit as per financial accounting. So you have to prepare cost sheet, P&L account, find out the profit as per cost accounting and profit as per financial books. Then again see in which item there is a difference, and you have to see which items you have to add and which items you have to deduct, and finally you have to prepare the reconciliation statement. So hope you have understood. Thank you.